Good evening, everyone. Welcome. We're going to give participants another minute just to make sure that everyone gets into the webinar, and we'll get started at 5:01 on the dot. So I'm going to I'm going to give everyone another minute just so that they are able to join.
Oh.
Okay, it's 5:01 and I see a few have already joined. So we're going to go ahead and get started since I know we have a lot of content to cover tonight, and I'm sure some of you may have questions, and we want to be able to leave some time for us to answer those at the end of the presentation. So good evening and welcome everyone. Thank you for joining us this evening for I think it's our 5th part webinar series on first-time home buyers, your pathway to home ownership. Today we will be discussing shopping for a home and protecting your investment. My name is Suhey Mojica. I'm the Senior Coordinator of Business and Assets of the San Pablo EDC. And presenting with me tonight is Lisa Marie Weather, who I will be introducing in the next few slides. See here. So before we get started, this webinar is being recorded. A recording will be available on our website at www.sanpabloedc.org. Any resources mentioned during the presentation will also be available on our website. As I said, it will be recorded. So a recording of this will be available for anyone who would like to go back and review maybe a slide that it's of interest to you. So please let us know. We can also even send you a link to the recording, but it will definitely be posted on our website. We also have a housing and health newsletter that goes out every Friday. We usually always add this content into that newsletter. So if you want to sign up or subscribe, please visit our website again at www.sanpabloedc.org, and you can definitely subscribe to that letter, and you will get any updates or information that we would like our community to be informed of. Please keep in mind that everyone is muted. So if you have a question, we definitely welcome them. If you look at the bottom of your screen, there is a Q&A box, or there's also a chat box. Please feel free to enter your questions there, and we will get to them at the end of the presentation. But before we get started, I would just like to give you a little bit of information about San Pablo Economic Development Corporation. We provide various programs throughout the community, throughout San Pablo and West Contra Costa County. We provide technical assistance for businesses, membership and sponsorship benefits, access to capital, home ownership, job development and career counseling, degrees and certified training, and employment and support services, among many other more programs that we offer. But today we are actually discussing about housing. So this webinar was possible with the help of our wonderful partner, Lisa Marie Weathers. We are grateful for her and her partnership and collaboration with San Pablo EDC. If you have joined us for the other webinars, you're probably already very familiar with Lisa. So I'm not going to read her bio today, since I think most of you guys are probably very familiar with her now. And again, this will be available if you wanted to learn more about her background and what she has done professionally in the mortgage industry. So with no further ado, I'm going to give the platform for Lisa, and her contact information will also be available at the end of the webinar. So if anyone wants to get a hold of her directly, we will share that information again at the end. So welcome. Lisa, and the platform is all
Hi.
yours.
Okay, thank you. Hi, everybody. Again, I'm having a little trouble with my voice, so please excuse me when I sip a little bit of water every now and then. So we're talking about shopping for your home. One thing that I want to say up front that sometimes first-time home buyers don't realize is that real estate agents are a huge resource, and you should use someone who's experienced, because guess what? You don't have to pay for them. The seller actually, in most transactions, and actually in all the years I've been doing this, I've never seen a seller not pay for both real estate agents. So definitely connect yourself with a real estate agent. We'll talk about that later. So when you're shopping, things that you're going to consider, definitely the size of home. Also be aware, in the Bay Area, your first home is probably not going to be your dream home. So you really need to focus on the things that you actually need and be grateful if you can get some of the things that you would like. So size, of course, is a big thing. Consider, the size of your family right now, what you can get by on, and then if there are any changes, if you're planning on having a bigger family, or if you're okay downsizing, those are things to consider. Um, uh, Things that you absolutely must have. You would, generally speaking, when you first meet with your real estate agent, assuming that you're not going to do this on your own, when you first meet with your real estate agent, you're going to give them a list of your needs and your wants. Things that you definitely would need, like number of bedrooms and bathrooms. Wants, might be, maybe you want a pool, maybe, um, you want to be close to in certain neighborhoods. Those are things that you would want to discuss up front with your real estate agent, so they will know what to show you. Next slide. Okay, before you connect with a real estate agent, it's a good idea to start looking on your own to get an idea of the things that what's available and what the prices are and what you're gonna be up against. So of course, everybody's familiar with the internet. You can use, there's so many real estate websites, but if you just went on Google and just started typing in the neighborhoods that you're interested in or types of homes that you're interested in, you will get a plethora of options. Newspapers, driving through neighborhoods is always a good thing. You might see for sale signs. Visiting open houses is always a great way to see what's out there and actually be able to walk through. You don't actually have to have a real estate agent there with you. And then of course, new home projects, new construction, great way to even get design ideas. But next slide. New projects, definitely. This is a foreclosed homes. There was a time in the Bay Area where that was not a thing, because foreclosed homes, if you don't know, are homes that were lost because someone didn't pay their mortgage and the bank basically took the home back, or maybe homes that are being sold at a tax auction because the owners didn't pay their property taxes. So those are an option in this market, but the problem is finding those foreclosed homes, because very often what will happen is that real estate agents are on the lookout all the time for homes that can be sold. And so if someone is in danger of having their home foreclosed, there's a notice of default that they receive from their lender that real estate agents do have access to. And they will often go and approach a distressed homeowner before the property actually is foreclosed and get it before it actually ever goes onto the auction block. So connecting with if you're interested in foreclosed homes, then you really need to connect with real estate agents who have experience in that arena. And then there are also many lists that you can subscribe to where they will actually sell you lists of foreclosed homes that you can actually buy, and you can buy them with a home loan. You don't necessarily have to come with all cash. You can actually buy foreclosed homes with a bank loan. Next slide. Evaluating your dream home. One of the big things that you want to do before you actually decide, yes, I'm going to buy this house, even if you have an accepted offer, you have to get an inspection. It's not required in most cases. It's not required by your lender. It's not something that is anyone is going to tell you you have to do, but a home inspection is critical because it's going to tell you things about the home that you cannot see with the naked eye. And if you're not experienced with construction and just properties in general, there are things that you may not be able to see that a home inspector will be able to see. So this is the biggest thing that I always tell people. Be prepared to, normally you're not going to be able to inspect the home until you have a contract. So you're shopping, you make a bunch of offers, you finally get an offer accepted, then your clock starts ticking in terms of how much time you have to close on the home. So the first thing that your real estate agent is going to tell you, if they're worth their salt, is to get a home inspection. You're going to have an inspector come out there to the home, and usually they're going to have a digital camera and they will have a computer, and they're going to go through that house from top to bottom without opening any walls or anything, and they're going to try and tell you exactly what kind of shape this house is in so that you know what you're buying. Very often there might be issues with the home, and that does not necessarily mean that you won't buy the home, but it means that you have a negotiating tool to maybe reduce the price, maybe get the seller to pay for things that need to be paid for to be fixed before you can actually close on the home. But no matter what anyone tells you, please, please, please get a home inspection. That is invaluable, and you won't be able to tell without one. When it's all done, usually you're going to have pages and pages with pictures and specific information about each system in the home and whether or not anything needs to be repaired or replaced. Another thing that you want to check is, of course, the schools. And if you have kids and that's a concern, you want to check out the schools, daycare centers. Definitely check traffic patterns and whether or not you're going to have trouble getting to and from work. So driving to and from during rush hour is great. Another thing that we didn't list here is to just go sit out in front of the home at night and just see what happens in the neighborhood at night. Is there parking? You know, are you going to be able to be okay in this neighborhood once you close on a home? Because once you close, it's yours, and you know you can't do anything about it. Next slide. Estimating the fair market value. This again is where a real estate agent is critical, because they have access to public information, public records that will be able to tell you homes in the neighborhood that are similar to the one that you're considering, what they've sold for, and what this one is likely worth. Because you want to be able to, in order to put yourself in the best position, you want to have a good idea of what you think the property is worth in order to know what you're going to offer. And that's what an appraiser will use, all of the same information that your real estate agent can use to determine the value of the home. They'll actually come in and look at everything, compare it to homes nearby that have sold recently to come up with a value. But before you actually get an appraiser, and before you so that you will know how much to offer, you definitely want to get an estimated value, and your real estate agent will be able to help you with that. Next slide. when you write your offer, of course, you're going to tell your seller how much you want to pay. Um, you're also going to say, and this is negotiable about earnest money. For those who don't know what earnest money is, that's basically your good faith deposit. That's what it's normally called. And even if you're getting 100% financing, you're still going to need some money set aside to be able to even get into a contract on a home. So I've seen people who've gotten into contract and put down 3% as earnest money. I've seen people put earnest money of $500 or $1,000. So that is something that you'll put it in your contract, but the seller can come back and say, you might say, okay, I want to put down $1,000 just to let you know that I'm serious, so that you can take your home off of the market while I do all of my due diligence to close the loan. You are going to it's something to let the seller know that you're serious. Your offer is also, of course, going to include the names of everyone who will be purchasing, and that's important because the contract, once you have an accepted contract, your lender is going to want to see the names of the people who are in contract, and those should be the names of the people who are on the loan. Everybody who's on the contract to purchase will also have to be on the home loan. Your contract also includes the address, your estimated closing date, that also is negotiable, and whether or not you're going to have a home inspection. Next slide. Like I said, it's not a requirement, but it's something that you should consider as essential. Your offer also will tell the seller what kind of a loan that you're getting. So it might be a conventional loan, or it might be an FHA loan, it might be a VA, it might be something using down payment assistance. Your real estate agent is going to know how much information they want to give, because sometimes if you get too involved and give too much information about what your financing will be, it might scare the seller to know that you're layering, 4 or 5 different programs, which I've done like the most that I've layered in terms of down payment assistance loans to get someone into a home with an affordable payment. I actually layered 7 different loans for one borrower. And they're probably in great shape now because the home has increased in value and they have lots of equity. Your offer will also include any contingencies. Like, contingencies are basically conditions. So it'll say you have X amount of days for an appraisal. You have X amount of days. Usually it's 17 days is hardwired into the California real estate contract, where Board of Realtors contract. They give you 17 days to get your loan approved. And these are all things that when you write your contract, you will say, I want to buy this house contingent upon these things. Who is going to pay the fees, like transfer taxes, and basically how much time it's going to take for you to close. And that just sets the framework for your purchase. It may not go as planned, just depending on a lot of different variables when you're buying a home, but you're setting the ground rules, basically, that can always change, and you will always be able to go back to the seller and say, maybe I need a little bit more time, or maybe I could close sooner, just depending on what's happening in the transaction. Next slide. Contingencies, like I said, are conditions. So you're saying to the seller, I will buy the house on these conditions that I can get my loan approved. Hopefully, if you're smart, you've already connected with your lender and you've already gotten a really strong pre-approval where they've checked your credit, they've checked your employment, your savings, everything that is necessary to know that you are going to be approved for this loan, so that you don't have any surprises. Another thing that is critical that you don't really have any control over, you have to pay for it up front, and it's non-refundable when you do pay, is for the appraisal. So the appraisal is the estimate of the value, basically, and that's what a lender is going to use to determine whether they should lend you this $500,000. So, or whatever it is, hundreds of thousands of dollars in the Bay Area that you're going to have to borrow, unless you're paying cash. Lucky you. um, but the appraiser is going to go out to the home again and spend a good amount of time just going through, taking pictures, checking to make sure that all the systems work. And at the end, you're going to have an report that goes to the lender, and it also goes to you to say, this is based on everything that I've witnessed at the home and based on other homes similar to it close by that have sold recently, this is the value. Now, just because the appraiser says a home is worth X amount of dollars, you may not agree. So there is a process where you can rebut the appraisal. If you think it's worth less or worth more, you would have to come with proof with other support, comparable sales in the area to say, yes, it is worth more or less, whatever is in your, you usually don't want to say it's worth more because that means you're going to have to pay more. But it might be a situation where you offered $500,000 and that's what the seller needs to get for the property, and you believe, based on your real estate agent's research, that it actually is worth $500,000, and then the appraiser comes in and says it's $450,000, and you know that the seller is not going to sell it for $450,000, and you know that there are sales similar of properties similar to the one that you want to buy, then you would have to come in with proof and say, yes, it is worth more. But just keep in mind that fighting for a higher appraisal is not something you necessarily would want to do, but sometimes you have to if you want to get that home. Another contingency is that, of course, the lender is going to require that you be transferred a clear title. And all that means is that there are no clouds, or there's no question about the seller's ability to sell this home to you, and that they actually have the right to sell the home to you. So the title insurance company will be selling you a title insurance policy that says there is a clear title. It doesn't mean that there actually is a clear title, because it could come up later that someone else is claiming ownership, but that's why you have title insurance, is to protect you in case someone comes later and says that they actually own the home and you didn't have the right to buy it. Another contingency is home inspections. Like I said, not a requirement by anybody, but it should be a requirement that you have that says in your contract that you will buy this home as long as it comes back that the house is safe and safe to move into. And if it's not, then it's an opportunity for you to go, you get a home inspection and find out that there are problems with the foundation or whatever. The problems might be, or there's water damage that got painted over. Anything like that is an opportunity for you to go back to the seller and either have them to repair it, repair whatever the issue is, or reduce the price, or maybe both, or you might want to just back out. And then, of course, if you have a home that you're selling and you're using the proceeds from that sale to help you purchase this new home, then of course that would be another contingency, because if you can't sell your existing home, then you can't buy the new one. You might be able to, but you probably don't want to. Next slide. Now, thing to know when you make an offer on to purchase a home, one of three things is going to happen. Well, four things could actually happen. The seller can accept your offer as written and you just proceed to closing. They could reject your offer outright and you just continue looking for another home. They may counter offer and say, okay, maybe they want a higher price, or maybe they want a shorter close, or maybe they want a longer close. They could come back to you with a counter offer. And then it's up to you to either accept or reject. And then another thing that often happens, and I've seen, they will come to you and say, okay, we like no, we like your offer, but there are a whole bunch of people here who want to buy this house, and we want you to make your highest and best offer. And they go back to everybody because the seller's trying to get as much money as they can for this property, of course. And so they go back to everyone and say, please come back and give us your highest and best offer. And then depending on what they get back, you may or may not get your offer accepted, but the seller is just trying to make the most, get the most that they can from the home. Next slide. Oh, of course, the same applies for the buyer as well. The seller can come back to you and say, counter offer. You can say yes or no. It's the same thing, both sides, but it really is up to the seller to accept your offer because they're the ones who are, have the power when it comes to a sale. So once you have your offer accepted, that's when the pressure really is on, because you have a certain amount of time, and in this market, I'm seeing 30 days is the standard amount of time that offers are being written for that you have to close. So you are gonna immediately want to let your lender know that you have an accepted offer. You send that to them right away because there is a time crunch that starts to happen. Once you give your lender your contract, they also have to have all of your information. Hopefully they've already collected that information, but if you started shopping, months ago and you just haven't found anything, you're gonna need to update all of your information. So your income information, pay stubs, bank statements, you might need to update a credit report depending on how old it is. All of that information needs to go to the lender because then they need to start the process of getting you a loan commitment from underwriting. And the underwriter is the person at the bank or whatever lender that you're using who has the power and the experience to look at a file and say, yes, this person meets the guidelines to be able to be approved for this, $500,000 home. And yes, we're going to do it. They can't do it without an appraisal. They're not going to require an inspection, but like we said, that's going to be one of the requirements that you have for yourself. And they're going to just trust but verify everything that you've submitted. Go through and check with your employer to make sure that you make what you said that you make, that that your employment, your likelihood of continued employment is good, because they want to make sure that you're not on the verge of being fired. And just checking to make sure that everything that you're going to pay this loan, and they're not going to be stuck with it. Surveys in the Bay Area is not a requirement, but it depends on your lender. One lender that I know does require surveys is NACA. They, no matter what's going on, at least maybe they don't require it now, but in the past they have required an appraiser, a surveyor to go out and mark the property lines so that you know where your lines are drawn and what you're buying. Next slide. Types of insurance, of course, you're gonna need a homeowner's insurance, and that protects you in case the home burns down. It protects you from break-ins, that kind of a thing. Flood insurance is only required if you're in a flood zone in an area that has a history of flooding, and your lender will let you know. So that's not something you have to, unless you know up front that you're in a flood zone. Then that'll be required. Mortgage insurance is required if you don't have 20% equity in the property. So if your first loan amount is going to be for more than 80% of the value, the price of the home, and you're getting a conventional loan, then that means you're going to need mortgage insurance. If you're getting an FHA loan, Federal Housing Administration, you have to have mortgage insurance, even if you have 20% down. They're going to require, and mortgage insurance, like we've discussed in the past, is just insurance to protect the lender in case you don't pay. Title insurance is another thing that does protect you and the lender, to say that you're getting transferred clear title to the property. Mortgage life insurance is a type of insurance that you can get that covers you, like if you were to die, that would pay off the mortgage for your kids, and then or whoever you're going to leave the house to. And a home warranty policy is something to protect you in case any of the systems in the house might go out. It's not a requirement for most lenders, but if you're getting like a CalHFA, California Housing Finance Agency loan, then it is a requirement that you get a home warranty, because they don't want you to be a first-time home buyer and be stuck in a house with a water heater that's broken and you don't have money to pay for it. So that's what a home warranty will cover you for. If things, the water heater, your heat in the house, things like that go out, your home warranty will cover that. Next slide. So that's always a good thing to have as a first-time home buyer. There's so many categories of loans. There's just a conventional conforming loan, which means you're getting just a standard loan for a home that's not, more than 550, 600,000. If you're going above the conventional loan limits, and it's about to change this coming month, then you're in, and we don't have it here, but it's it's called a jumbo loan, or a high balance loan. And it's not a problem. It just means that when you're borrowing more, then the requirements are a little more stringent, and you're also going to pay more, because when lenders there might be a fee, extra fee that's charged to you for getting a high balance loan. Subprime loans are more for borrowers who have maybe credit challenges, or who may be spending more of their income than what is recommended. But subprime loans are not what they were in the 2007 time frame, before the market crashed. Now loans to owner-occupant home buyers are restricted by law. So every lender has to make sure that you have the ability to repay. They're going to check all of your income and make sure that you're not overburdening yourself, because they're trying to prevent the foreclosure crisis that we lived through. There are government insured or guaranteed loans, which are FHA, VA, USDA. They're all different types of loans. It really just depends on what your needs are and what category you fit into. Down payment assistance programs do exist, and they're available. The thing to know about loans is that you have to work with someone who understands what they're doing and who has experience with first-time home buyers, because you may not know about different programs that are available to you that'll help you get into the home with a more affordable payments, maybe with a lower interest rate. It just depends on what your needs are and what your category is. So be sure to ask your lender if there are any special programs that you might qualify for. Next slide. Insurance. Now, I'm not an expert in this. And Suhey, please feel free to jump in. And normally what happens with my borrowers when they get into contract on a home is that I tell them, okay, it's time for you to start shopping for insurance. The best place to start is with your current, like if you have cars insured, that's a good place to start, to just find out what it's going to cost, because your insurance is going to be calculated in your debt to income ratios, basically, to see if you can afford the home. So of course you want to shop for an affordable policy, but you want to make sure that you're protected as well. So your insurance is going to cover the contents of the property. They're going to consider what kind of a home it is, whether or not you have sprinklers. There are lots of different things that an insurer is going to look at to determine whether or not they want to insure you. If you're the kind of a person who they think might set the house on fire, they're not going to insure you. If you have challenged credit, that might be an issue. I'm not saying that you cannot get insurance, but there is, let's say you get into contract on a home and for whatever reason, you cannot find insurance that is affordable for you. There is something called the state insurance fund. Suhey, let me know if you are familiar with this, but there is a way that you can get insurance through the state that'll be affordable if you are having trouble finding insurance. You're generally all you want is a standard homeowners insurance policy. They want to make sure that you're not paying too much of a big deductible, and they want to make sure that whatever your lender wants to make sure that whatever they're lending you, that this insurance policy will cover at least their loan amount if something happens, if the home was to be destroyed somehow. But just know that when you buy a home, you have to have homeowners insurance. Otherwise, no one is going to lend you any money to buy a home. You got to have insurance to close.
I think I'm going to jump in and help just add some of my information here. But everything that Lisa has said here is definitely correct. All of these items is what the insurance company is going to provide when they provide you with a policy quote. Just keep in mind that it's also good to shop around. Like Lisa said, if you can start with where you have your auto, that would be great, because sometimes you get a discount if you have multiple policies within one company. Because we're in California now, just one thing I want to add is with the fires, you also want to make sure you shop around early, because a lot of companies are not accepting certain risks, which are properties that are within certain areas. And you might have to basically shop around even more and have that agent who's helping you look for a company that's willing to take that home. And like Lisa said, that it's affordable, because this policy covers anything it's a fire protection. Basically, it's there to protect that property, so that the bank is able to recuperate its investment by helping you purchase this home, because you owe it to the bank that it's covered in case of a fire. Now, any other insurance that you want to add, if your property is in a flood zone, you're going to have to get also a flood insurance quote, and then on top of the fire dwelling insurance policy. Another things that I've noticed too is sometimes individuals will start looking for a quote, and then there's something wrong with the roof, or there's something wrong with the structure, and that insurance company may say, no, we're not gonna offer you any coverage, because those items need to be corrected before we can insure the home. And that's something that then you can negotiate within that contract. So those are just things to keep in mind, but everything else that Lisa has said is definitely the things that you want to look at when you're shopping around for insurance, since it's part of how the lender is going to say, okay, the property is insured, and then there's your property taxes, which I'm sure Lisa will talk about. We have talked about in other webinars, and I don't know if it's in the slides, but it's part of your payment. So always keep in mind that you want to be able to, I would always recommend to get 1 or 2 quotes, so that you can compare them to see if it's an average of what it's being charged out there.
Awesome.
Next slide.
Okay, so you've gone through the process of making an offer, having it accepted, getting your home inspection, getting the appraisal done. You know that the property is worth what you're paying for it. By the way, if it's not worth what you're paying for it, and you still, if the appraisal comes in low, you still want to buy the property, the bank is not going to lend you more than what it's worth. So you would have to come out of pocket for whatever the difference is if you still wanted to buy that home, or get the seller to reduce the price. So now you're ready to close. Before you actually sign on the dotted line to actually have the seller paid off, you should do a walkthrough, and your real estate agent is going to tell you this, to make sure that everything that you thought was included in the sale and that was in the contract is there. Like if they had a fridge that you just loved or you need, and suddenly the fridge is gone, or whatever, anything that, one of the things that would be in the contract, you want to make sure that you note everything that is in the home that you expect to have stay in the home. And sometimes the seller will say this specifically, this item is not included in the sale. So you're going to do your walkthrough. You're going to get a copy of what's called a closing disclosure. And that has to be at least a week before you're ready to close. You're going to get from your lender, and it may come through the title company as well, a closing disclosure that basically tells you, okay, this is the transaction in numbers, to say this is what you're paying for, these are all the different costs that are included, and at the end it's going to say how much money you need to come in with at closing. Or if you put a big deposit down and you didn't need all of that money to be included for all of your closing costs were less than you expected, then you could get that money back, whatever extra that you might have put in. The escrow officer will usually within 24 hours of you signing your documents is going to also give you a settlement statement that'll reflect pretty much the same information that's on the closing disclosure, to just get you prepared and tell you this is how much money is going into the transaction, this is who is being paid and how much they're being paid, and here's the bottom line. So if you do have to take money into escrow, either you're going to do a cashier's check or a wire, you'll go to your bank. I always tell people a wire is easier because your lender has already seen your bank statements, and you don't have to worry about paper trailing anything if you just get a wire sent into escrow. It's cleaner that way, but you will ask your escrow officer how would they like the money to be sent in. And like I said, you're not going to be able to close on a home unless you have homeowners insurance. So your escrow officer, your loan officer, everybody's going to make sure that you have a quote, a policy in place before you can actually close on the home. And of course, don't forget that you're going to need money for movers and to put the utilities into your name. Funny story, one time I had a borrower who was closing on a home, and she was new to everything. It was like, she was very excited, very committed to the process, but she didn't think all the way through to, okay, now she's closing on a home and she didn't call and get the water in her name or utilities on anything, and the seller had everything disconnected. When you're having an appraisal, your power has to be on, but that's going to be in the seller's name because they need to be able to check and make sure that everything works. But it's possible that after the appraisal is done, the seller, and they know that they're closing, they want to get all the utilities out of their name. So you have to be prepared to know that you have to get everything turned onto your name. She called me and said, what? There's no water. It's easily rectified, but that's something to be aware of. Small things, but important. So your closing, we talked about your closing disclosure and what that is in the escrow settlement statement. When you're signing your loan documents, a promissory note is basically your promise to pay the lender. It says how much you're borrowing, what the interest rate is, what the term is. Your deed of trust is your security for the loan. You're basically, you own the home. When you buy it, you own it. You're borrowing money from the bank and you're giving your lender your deed to the property to secure the loan, which gives them permission that if you don't pay, then the deed of trust is theirs, and they can foreclose and sell it to pay back the loan. Your title insurance policy, all of these things are documents that you're going to receive at closing. Usually what's going to happen is that you'll get a folder after you've signed all of your loan documents, a folder with everything in there that tells you everything you ever wanted to know, and some of it that you won't understand, that you can talk to your lender, your real estate agent to help you understand things. But that's the documents are critical that you keep them in a safe place so that you can refer back to them later on if something comes up that you need to deal with. So yeah, that's you'll have a bunch of documents, and if you have a bunch of down payment assistance programs, you may have multiple sets of loan documents and things that you need to keep track of and keep in a safe place at all times. When you move into your home, you know, there are some nonprofit organizations that have a post-purchase program for first-time home buyers who buy a home and then don't really know what to do after they, you know, achieve this tremendous dream. But there's so many things that you need to know and be aware of as a homeowner. I mean, just as simple maintenance things to keep your home in good shape and to, you know, secure your investment, make sure that you're taking good care of the property. And I really recommend that you find one of those nonprofits and enroll. You might even be able to do it online, but to do a post-purchase workshop so you are painfully aware of all the things that you need to be aware of. It says here, of course, you're going to have, hopefully, if you're good, diligent about safety, you're going to have your fire safety plans, you know, together. You're going to have emergency numbers that you post maybe on your refrigerator. You'll know, you know, have a plan with your family in case there's earthquake, fire, whatever. One thing that happens, but it should not happen, is that the law requires that you have smoke detectors and carbon monoxide detectors in the home in order for it to be sold. I've seen this more than one time where real estate agents they know that you have to have a smoke detector and a carbon monoxide detector in the home in order for it to even get a loan, because that's the law. But sometimes the seller won't have it, and real estate agents will drive around and have a carbon monoxide and smoke detectors in their car just so that they can attach those to the property when the appraiser comes. Because if those aren't in the home, it's a stop. The lender is going to stop everything until you get those installed. But if the real estate agent puts them in just to pass the inspection and they take them out, you may not have them when you move in. You're not going to, you know, so make sure that you have your smoke detectors and your carbon monoxide detectors in the home and working, and that you change the batteries every year as part of your, you know, regular home maintenance. Having a fire extinguisher on every floor is also a great thing to do. And then, of course, hopefully you already have a first aid kit, but that's something you want to check every year. And that's something that you would go over in a post-purchase workshop, but it's always a really good thing to do. Next slide. Changing locks after you move into the home. It's surprising that most people don't do that. But you don't really know who has lived in that property and what kind of people, you know, might come back in the middle of the night. So it's always a good idea to change the locks. When you become a new homeowner, just to have a sense of security, chances are nothing will happen, but it's always a good idea to just change the locks so that your keys are only with people that you want to have keys to your home. The rest of this stuff is kind of information that you can get in a really thorough post-purchase workshop, but it's all about maintenance, you know, trimming the shrubs, especially with fire season, like we were talking about. If you're in an area where that's an issue, you really do have to keep everything trimmed back. Any dry brush or anything, keep it away from your home, because you don't want to be if you can avoid it, you know, you don't want to be one of those people who is a victim of a fire that could have been avoided. Next slide. Now we're going on to, how much time do we have? We don't have a whole lot of time, so I'm gonna go quickly through these. But if you're, one thing I want to mention, I think we might talk about it in the next seminar, the last one, about programs, special financing. But just know, just keep it in your mind that there are loans for rehabilitation. If you were to buy a fixer-upper, it is possible to get a loan to buy a home that's in horrible shape, or maybe just the remnants of a home that burned down. You could actually get a renovation loan. You can also get loans to just build a home from the ground up. If you're out there shopping and you're realizing, my God, I'm paying $1 million, $500,000 for a shack that needs to be torn down. It is possible that you can actually build from the ground up. And that's something I really am passionate about. There are opportunities out there with very little money down, sometimes no money down if you own land, or if you're buying land that you're making payments on, it's possible to get a loan to build from the ground up or a renovation. So let's make this fast and furious. If you have more information, if you need more information about renovation, about doing renovations, feel free to contact me, because I was a renovation specialist and a manager at Wells Fargo when I first started. So this is kind of like my sweet spot that I love, because you know, the idea that your first home is not going to be your dream home when you buy it, you could make it that, and end up with a lot of equity. So if you're ending up deciding that you bought a home that you want to remodel, or it needs repairs, you're going to need a contractor unless you're able to do the work yourself. But if you're getting a loan, 9 times out of 10, they want you to hire a contractor that is not you, because they want you to work on your job that you need to make your payments. So they want you to use a contractor so that you can continue doing your job, so that you can pay your loan. Okay. One thing that I want to really make sure, if you're gonna use a contractor, check the state, what is it called? I'm drawing a blank right now, but there is a state organization that licenses contractors, and you can go onto their website and check the license of every contractor that's out there, and you'll be surprised of the things that you might find. But definitely check their licensing. Of course, you want to check with friends and family members to see if they have any references for you. There are lots of things that you can do to make your home better. Of course, women love kitchens and bathrooms, and that's what sells homes. Guys do too, I'm sure. So those do add a lot of value to a home. If you're gonna add another bathroom, if you're gonna make the kitchen better, add more closet space, especially in the Bay Area. There are lots of homes that have little to no closet space. So if you can add that, that'll be a plus. Adding a garage, deck, patio, a porch, and even skylights. So you can do a lot to make your home worth more, let alone just being in your home is going to, if you can stay in it in this market. I read something recently that said this year home values are projected to increase by 16%. I can't even imagine, but I do have lots of borrowers who went into homes when prices were like in the $300,000 range, and now their homes are worth $600,000 and $700,000. So get in. Get in there if it's affordable for you, because in the Bay Area, prices are just going up and up and up and up. Planning a project, there's a lot that goes into, I should have taken this information out, and we should have made this a whole nother presentation. Let's just contact me. Is that okay to say, Suhey? If you're interested in renovations, contact me. I'm not a salesperson, so I'm not going to try and sell you anything. But if you have questions about renovations, call me so we can talk it through, because we don't really have a lot of time to go through all of this.
Right.
And it's a lot of information.
I think if anything of importance that we can add here, Lisa, is that when they are looking for a home, if there is a home that needs a major project to be done,
yes,
that before they place an offer on that home, that they take some time out of their day to go check with that city to find out how much the permits will cost, and if there's codes that maybe there was an extra added room that wasn't permitted, and then part of it, it's you have to demolish it and then ask for permits and then pay for all of to make sure that it's in code. So if that's going to add an extra added expense to this purchase of this home, then you can really decide whether it's even worth it to go after that property or if it is. So that way you know exactly what to look for. But I think that one's the biggest one. It's like Lisa said earlier, you want to make sure that you inspect the home, that you know exactly what you're buying. And if it is something that you then later have to spend money on because it's unpermitted, or you feel like, oh, I want to add this to this home, but then you go to the city after a year that you've purchased the home and they say, unfortunately, we don't allow that in the city, then now that home that you purchased might not be like something that you were really happy, because the whole intent was that you wanted to add something that city doesn't permit. So I would say out of this slide that would probably be the best to take out from here when you're looking to buy a home. And then the second, as Lisa mentioned, when you are looking to hire a contractor, I believe the website you were talking about it's the Better Business Bureau, where you can do a search, or I think there's one especially for contractors too, but you can search them and it would it will tell you if their license is still active, because sometimes you may have individuals out there, they say that they're licensed and bonded and insured, but when you look them up, their license has been revoked because there's been things that they've done. And
I've seen that happen.
And so
it's I cannot think of it. But it's a state agency that licenses contractors that you can just Google and you'll find it. And I'm gonna kick myself because it's gonna come. And then the last thing I want to say about this is that I've seen lots of properties that people want to buy that have unpermitted space. And it's never a problem for the lender. Usually all that's going to happen, well, I can't say it's never a problem, because it might be just something like a fire hazard or something that the lender doesn't want to lend on. But generally speaking, what will happen if you if you're trying to buy a home that has unpermitted space, is that the appraiser won't count it in the value. If there's an extra space there, it doesn't have everything, you still can buy it, but it's not going to be counted in the value when the appraiser appraises the home, which, is a good thing for you.
Which makes sense. Yeah, exactly. Because you still can purchase that property and not worry about it.
Yeah, right.
Yeah. Okay.
This is all more information about contractors. This is all pretty,
okay.
Yeah. Now, down payment assistance loans, my probably favorite thing in the world is helping people with down payment assistance, because the biggest obstacle for first-time home buyers is coming up with all the money that they're going to need for down payment and closing costs. So just know that there are programs available. Suhei is going to talk to you about some of them next time, right? That are available to help you get into a home with to help you get into an affordable payment. Recently, I had someone ask me, because they wanted to use one particular down payment assistance program, and they hadn't been working with any real estate agents and hadn't been in contact with any lenders. And this person thought that they had to go directly for all of the assistance that they wanted, that they personally had to go directly to each agency. And in addition to applying for the first loan, the big loan, they had to apply to different agencies for additional subordinate loans. And that's not how it works. Luckily for you, usually what is going to happen is that your lender is going to coordinate everything that you need, whatever down payment assistance programs that you're going to get. Your lender is going to go through and underwrite and apply for everything on your behalf and coordinate the closing so that everything happens is kind of seamless. All of the same information that you would normally submit for a first loan is what typically you're going to need for any other loans, any down payment assistance loans. So just be aware that your lender, if they're familiar with working with down payment assistance programs, they will drive that process and help you out tremendously. Okay.
And I think this was your last slide, Lisa.
Yay!
So
5:59. We made it.
We made it on time.
Yeah.
So, as Lisa mentioned, our next webinar next month in November, it's going to be November 16th at 5 p.m. We are going to be talking about this type of assistant loan programs more in depth and in terms of maybe a few as examples, because obviously, as you can see from Lisa's presentations from before and today, is that there are so many loan programs out there, right? And if you're working with the right lender, that lender will be able to look at your case and be that professional and that expert in that area to be able to say what program suits you better based on what your case looks like, right? Because I think you don't want to go to a lender that puts everyone in the same mold, because everyone is different and their scenario is different. And then also you may have someone that you really like that you want to work with, but unfortunately they may not have first time buyer like assistant loan program experience. And that could basically put you out of like the opportunity of being able to take advantage of some of those programs to help you with down payment. So it's very important that you work with the right professionals that have the experience with these programs, if that's something that you want to take advantage of. And sometimes they might be able to tell you, if they really know, like, you know, based on your case, if you really want this property, it might not be your best scenario to go into, or they might be able to say, actually, this other program is better. So we're going to go into depth into those, into that next month. So if you want to learn more about what's out there, what kind of programs are out there, how much they're able to provide in down payment assistance, and also knowing how they work, because some maybe assistance as grants that are forgiven after a certain period of time. And then some are just there to help you to get in your foot in the door to purchase this home, but they are going to be needed to be repaid back in a certain amount of years, or when you sell your home, or where you refinance. So we're going to go over all of that next time, but that just to give you a little bit of an idea of what we'll be discussing next time. I think we had one question, and let me see if I can go back and get it. Jesus, where is it? Okay. So I think I wrote it down actually. You mentioned earnest money or down payment.
Yes.
When you're letting that seller know that you're really serious about buying this home, right?
Right.
So does it matter how much you provide when you're putting in your offer, whether it's $1,000, whether it's $20,000? Does that make a difference? Or
well, your real estate agent is going to be able to give you a good idea of what the market, you know, what works in the particular market that you're in. Like I said, I've seen people put a $500 earnest money deposit. I've seen people put, just recently, I have a borrower in contract right now who put in 20 something thousand. So it matters if the seller cares. You know, some sellers are really antsy. They're worried that for whatever reason, you know, they may have been in contract with someone who fell out of contract because things didn't work out for whatever reason. And now this is their second, third, or fourth time around, and they want to make sure that everything is going to be okay. So for some sellers, the more money that they see you put in, the more comfortable they are. So your agent is going to tell you, and you'll work. This is negotiated between you and your real estate agent. When they write the offer, they will put down how much they think that you should put as an earnest money, and that money just sits in escrow. To make the seller feel secure, but it's also going towards paying your closing costs and whatever your obligations. That's your money. But the seller could come back and say, they may reject your offer because it's not enough, or they may come back and ask you to put more of a deposit down just to make them feel secure. There's no
Okay.
way to really know because it's up to the seller to decide if whatever you're putting is enough.
So I
If
guess that
makes
would
sense.
be something that it would be really good for the person looking to buy the home, that they also work with a realtor that really understands
Exactly.
the market, and they really
Exactly.
understand how to write a contract that's going to
Mhm.
get accepted.
Yes.
That
Yeah.
also protects the buyer, right? Because that had a two-part question. So there was a
Mhm.
deposit. So let's say if someone was to put down a deposit or a down payment
Mhm.
to close the contract, right? So to see
Yes.
if it gets accepted. If
Mhm.
something is wrong with the property,
Mhm.
would they get that money back if they decide
Absolutely.
that they don't want to
Absolutely.
go for that home any longer?
Yeah, like I said, that money is their money, but you have contingencies in your contract, conditions that you're going to meet. And if for some reason you say that you're going to close on X day and you can't close on that day, the seller has been holding their property, off the market for you, and now suddenly you're not going to close. If you miss the deadlines in your contract and you don't get the seller to sign off on it, then your deposit is at risk. So your real estate agent, and I've never seen one that is not cognizant of this and that is not aware and protecting their borrower or their buyer. They're going to stay on top of everything and make sure that your deposit is protected. Once you miss any deadline that you agreed to in the contract, then it could go to the seller.
Okay, so it's
That's only
really
if you don't do
important.
your part. Mhm.
So I know that for anyone who's a first-time home buyer and they haven't probably placed an offer on a home before, you
Mhm.
will see that the documentation, it's a lot. And so a lot of the times you don't have time to read through all of those documents. So if you have a particular question, it's
Mhm.
really important that you ask your realtor and have them
Yes.
point out where in the contract have they written that contingency, because that way you feel protected and you feel like, okay, I know what will happen if we don't meet this, or if this
Mhm.
were to happen, then I know that there is a contingency written in the contract that I'm going to be okay, or I'm
Yes.
okay with the results if we don't meet a deadline or whatever. So it's
Yeah.
important that you ask questions when it comes to the contract to the realtor that you're working with.
Yes,
Um,
I've never seen every agent that I've ever seen that I've ever worked with, they always have a meeting with the borrower, even with the buyer, even if it's just a virtual meeting, to go over the contract, and they actually will go through section by section and tell you what, you're putting
what
in
is
there.
to expected?
Yeah, how
Okay.
much time you're saying that you're going to need to close, how much time you have for your inspections and that kind of thing,
Okay,
your
and there's just
appraisal and all
one,
that.
sorry.
Mhm. That's
So
okay. I'm
there's just,
sorry.
yeah, that's okay. There's one last question, and I think after this is the only other question I see on here. You
Uh-huh.
mentioned earlier that conventional loan right now is usually between $500 and $56,000, right? That will fall under a conventional loan.
Yes, but it's changing. November 1st, it's
Uh-huh.
changing. And forgive me, I never commit these things to memory because my memory is bad and they change every year.
Okay.
But it depends on the county that you're in. Um, it depends on the county that you're in. Like in the 9 Bay Area counties, the prices conforming loan limit, I can actually look it up. Should I look it up?
I'm
Uh,
just thinking because California is expensive already.
yeah.
So a lot of the homes, if you look at it, they're probably within that range or probably more for a first time
Yeah,
buyer,
very
right?
often.
Yeah.
Right now it's 548,250.
Oh, okay. And that's going to be
548
going
to
up.
50. Yes, November 1st. I think it's going up, it's gonna go up like 70,000. It's going up
Okay.
quite a bit. Quite a bit.
Okay.
Yeah.
Alrighty. And then that's the question, depending on what program their lender decides, that's something I'm sure the lender will explain as to why that program might be better for that buyer.
Yeah. Your lender is gonna be intimately aware of all of your particular specific information, and they'll be able to tell you exactly what kind of loan you're qualified for, and if you're not qualified, they'll be able to tell you that as well.
Okay, well, thank you so much, Lisa. So as you can see here, we do have a webinar on November 16th from 5 to 6 p.m. And we will be discussing the special financing more into detail. So if you're interested in knowing more about those down payment assistance programs, please join us on November 16th at 5 p.m. You can visit our website at www.sanpabloedc.org to sign up and register, or feel free to contact myself directly if you would like more information, or if you want to get in contact with Lisa, you might have a question that's particular to your case and that you prefer to ask her directly, not in this webinar, that's fine. So please let us know if there are any questions. A recording of this will be available on our website, and any information that you need, please reach out to us. This is Lisa's information, so if you want to write it down quickly as well, please do so. But other than that, I want to thank everyone this evening who joined us, who took time out of their day. And then, of course, to our wonderful partner, Lisa Marie Weathers, for presenting. I know it's a lot of information and it's hard to compress it all into one hour, but you've done a fantastic job in the last 5 webinars. So thank you so much.
My pleasure.
Good evening, everyone, and we'll see you next time. Thank you.
Bye.
Bye.
Bye.